Welcome back to the Funding Blueprint, the show where we dive deep into the minds of bold founders, operators, and investors who are rewriting the rules of startup growth. Today, we're joined by someone whose track record and insight speaks volumes, John Frankel, veteran investor, tech visionary, and founding partner of FFVC. With a career that started at Goldman Sachs and a portfolio that spans over 60 board roles, John brings a rare combination of strategic rigor, operational savvy, and forward-looking conviction to every conversation. In this episode, John shares his perspective on the evolving AI tech stack and how founders can identify the layers of opportunity within it. We dig into the rise of AI point solutions and how startups can run leaner, faster, and smarter by building with, not just on, artificial intelligence. We also explore where he sees untapped potential in complex sectors like energy and manufacturing, and how VCs can better approach these often overlooked but high-impact categories. John's experience spans decades in industries, but his curiosity remains as sharp as ever, and his advice for early-stage founders? It's equal parts practical and paradigm shifting. Let's dive in. John, welcome to the show.
Well, thank you very much for that voluminous introduction. I'm blushing a little bit here.
Well, of course, we are so excited to have you here today, and let's just jump right into it. So the AI tech stack is evolving fast, and it's getting more complex by the day. From your vantage point, how should founders and investors think about the AI tech stack right now? Are there specific layers, infrastructure, models, where you see the most long-term opportunity?
So I'm going to give you a long answer, and I apologize.
Please, no, go for it.
I have a few gray hairs, and I remember seeing transition from mainframe to client server, spreadsheets, and the like. Client server to internet to mobile to AI, and now this latest transition with GPT AI technology, which it's really interesting. Almost every other development of technology has helped people on the STEM side. Mm-hmm. There were calculations and number manipulation and the like, and this is the first time we've had it on the liberal arts side. And people are really trying to get their heads around it. Mm-hmm. The other thing is each transition, once you understood the underlying technology, it's a matter of taking that technology and then applying it over a period of time. Very little changed. So once you understood the internet, it was a matter of how you then apply that to a given industry and the like.
Yeah.
What we have here is an evolving tool set, and we don't know where it ends up.
Yeah.
And if there's no more development, no more scaling benefits, no more inventions and discoveries with regard to how to use and further develop technology, it's going to take 10 plus years to just deploy what's come out in the last couple of years into industry, and the enormous benefits. Mm-hmm. And so the evolving nature of what we're seeing means it's very difficult to know what it will evolve into. Which means that as an entrepreneur trying to get your head around this, you're not just signing up to getting up to speed, but putting a process in place so that you can continually stay up to speed. And what you know in July 2025 might be outdated by August 2025.
Yeah.
Whereas, back in with client server or internet or mobile, what you knew in 1 month was relevant for years.
Yeah.
So that's the first thing to really understand. Mm-hmm. The second one is, we've been investors at FF Venture Capital into AI-related companies for over a decade. And they've been deploying AI deeply into the product. It became clear last year, almost accidentally clear, that our founders individually were struggling to work out how they could use AI to help their own businesses run more efficiently.
Yeah.
The term AI point solutions to us, or AIPS, really characterizes the problem. It's not one solution that solves everything. It's a whole series of things. If you're trying to help legal, there's a series of tools for legal, or series of solutions for legal. Trying to help recruiting, there's a series of solutions there. Coding, we obviously know the companies, the products like Copilot and Pure Code that are addressing coding. Marketing, whole series of solutions and the like. And it's really become clear that unlike a lot of other business problems to be solved, this is less top down and more bottom up. This is a matter of hiring people with a certain willingness, desire to almost eliminate their own job by using AI, and to then move on to do the next job and try and eliminate that with AI and take it further. And so that takes a particular type of person. If you're working remotely and you're working 50 hours a week and you can collapse that down into 5 hours, are you the kind of person who puts your hand up and says, hey, I need 45 hours more work? Or do you go and do a second and third job, or go to the gym a little bit more? And so it really depends on the type of people you hire and the culture in the firm. So it's very much a bottoms up cultural change. And our view is smaller companies are going to be able to do that faster than larger companies. And so startups against incumbents should have a multi-year time advantage to really solve problems, run much leaner, and be able to be more aggressive and more capital efficient. So that's I've given you a lot there. So I'm going to pause and then pick where you'd like to take that.
Yeah, no, definitely. That was all very informative. So thank you for sharing all of that. Kind of diving a little bit more into those AI point solutions, those AIPS. Not all of them are created equal. Some automate minor tasks, others change entire workflows, like you mentioned. So, how do you evaluate the depth of an impact an AI solution has within an organization? Are there specific questions that you ask founders to determine whether their product is more of a vitamin or more of a painkiller?
So this brings us to an interesting question. You're a startup. Let's say you have 50 people, and you go, so what do we do? Do we try and reduce this to being a 20 or 30 person organization? Do we try and do the work of a 100-person organization? So how you think about that is important. The next thing is the solutions that you use to run your business more efficiently. Are these solutions you buy externally? Or do you put together your own solution internally? Mm-hmm. And I think it's a combination of the two for a lot of companies. One of the things that we've seen companies work to do is to take the data they have from their disparate systems and try and normalize it and put it into, for want of a better term, a data lake. And then sit on top of that AI that can analyze it. And they may well use different models for different parts of the solution they're trying to build. And so let's take this from theoretical to practical. Okay. So, as a VC, we have a VC operating system. It's called Totem. If you go to totemvc.com, you can see it. We actually built it. It's used by about 50, 60 VC firms out there and is being rapidly adopted. Within Totem, we felt it was important to have an AI note taker, which went from that's extreme to mainstream in about 2 months. Everyone is using AI note takers. But for us, we went to the Totem team and said, we just need the data in the system. We want to know what was said. So if I'm in a meeting, one of my partners can sit while my partner's in a meeting, I can see the summary of that meeting. And we actually built like a Facebook feed of that kind of content. So we said, Totem, go and do it. They decided to use Fireflies. I don't know what model Fireflies builds on, but Fireflies will optimize the model over time, and they will look to get better. And then Totem will say, well, Fireflies is great, but there's other solution over here that's greater, and unplug Fireflies and plug in next piece. I don't really care. I just want the summaries as good as they are. And over time, they should get better as either the models get better or the note taker that we use changes. So in this period of high experimentation, and I don't know where the commoditized layer is. To me, Fireflies feels commoditized, but I believe that they're a recent unicorn. So what do I know on that? And I think this is all being evolved. And because there's so much experimentation, you don't know where the final dollars settle out.
Yeah.
So for companies who are building these solutions, you have sometimes people feeling the wrappers are commoditized. Other times people think the models are commoditized. I think over time, as capital becomes scarcer and the tide goes out, we get to see which are the solutions that people really care about and really will concentrate their dollars in. And I think those barriers will become clearer in the future than they do today. But again, the technology is developing.
Yeah.
And, it's kind of funny. OCR, when you open a PDF and you can search for the text in it, that used to be the forefront of AI. We don't think that's AI anymore. Voice interfaces today are the forefront. We won't think that's AI. It'll be embedded everywhere. And so, again, what gets commoditized and what doesn't will be fascinating over time.
Yeah, definitely.
I do believe that for the time being, it's a combination of build versus buy. And there's another advantage of building stuff internally. Your team learns what they need to do. Now, when you peel all this back, we have a company with about 400 people. It's a lean team. The team used to be larger. It's lean. The company is growing 40% year over year, maybe a little bit more. And outside of salespeople, because the enterprise sales company, where they'll be hiring more salespeople to get in front of more customers. Outside of that, hiring is flat. Now, as a VC, my expectation is you've got a 40% growth company, they'll be hiring 25% more employees this year. And they'll have to deal with all of the recruiting costs and all of the training costs and all of the cultural aspect of adding all those additional people. And instead, they're not. And that means teams can be leaner. It means everybody in the organization is trying to be more efficient, saying, if only I could use AI here or use AI there, it can help me solve a problem. So it's a mindset. And it's up to people who are doing the actual job to solve this problem. As I mentioned earlier, it's a culture that you need to incubate internally. And you don't just hire people now for skills, you hire them for for want of a better term, agency as well.
Yeah, definitely. Let's shift a little bit here to the energy space. This sector is complex, capital intensive, and often seen as slow moving, but it's also packed with a lot of opportunity. So, from a VC perspective, how do you approach investing in energy tech?
So we're getting increasingly intrigued by energy.
Yeah.
So as a venture capitalist, you want to pick secular themes that will drive growth forward. So when we think about the energy space, there are a number of things that are important. Let's first understand what it is.
Mm-hmm.
Yeah. If you go back about 100 years ago, when electricity first came about in industry, companies would appoint directors of electricity to work out how they should be using electricity in their business. Now it's just suffused. It's in everything. Energy is the lifeblood of an economy. And so there are two things that are important. One is access to it, and two is how much you pay for it. The US is competitively at a disadvantage versus China. China is building enormous amounts of power that's relatively cheap. In the US, historically, energy demand has grown about 50 basis points or 0.5% a year, and was projected to grow about 0.5% a year prospectively. And so all of the supply, which takes years to come on, was set at that cadence. For various reasons, which I'll go into, demand last year was 4%, 8 times expected. And that is eating away of a cushion that you have between generation and consumption. So why is electricity moving forward so much? So one is the rebuilding of manufacturing capacity in the US, onshoring. Apparently we're going to build our own shipyards, enormous amount of energy required there, the steel that's required for it, etc. The electrification of transportation, which moves energy from gasoline to generation. And the last one are data centers. About half the data centers in the world are in the US, which is amazing given that's not the portion of population in the world. And that ratio is probably going to skew more to the US in the future. We're building massive data centers. And massive data centers require not just power, but enormous advances in battery capability as well. So if you look at this space, it's under a lot of strain, and you need to build energy cheaply. If you build it expensively, it's problematic. And so you have to look at the right balance between base load and itinerant, between natural gas, and I hate to say it, coal, and nuclear, versus wind and solar. And we've got to do it fast. Now, the current administration understands and they're working on it, but I don't think this is a partisan issue. I think this is a national security issue. Now, what's interesting is you have very smart people in the energy space. Mm-hmm. But we think we're at the point where orthogonal thinking will come in and find solutions in ways different than they have in the past. And that's why we think there's a real opportunity for venture investing in the space. There's clearly a lot of real estate and private equity and debt financing, etc., that needs to be provided. But we think there's this venture capital slice. An analogy to this is to think about what happened with getting payload to space. NASA is literally filled with rocket scientists. It's for very smart people. And yet, SpaceX came along and said, we can get the price of payload space down by 1, 2, 3 orders of magnitude. In fact, we need to do that if we're going to achieve various space objectives. And so what that resulted in was orthogonal thinking of how do we do that? Reusability. Well, you can't do reusability because of A, B, C, and D. And they went and solved A, B, C, and D include capturing massive rockets falling from space, turning them around and reusing them in a short period of time. So I think what you also did, you brought in a degree of simplification in how the technology works. And, the Raptor engine from version 1 to the current version is a great example of simplification engineering. So in the same way in the energy space, we think there will be people who will come in and look at the problems with new eyes in a new way and help us solve some of these national security issues we have in energy. We think it's really exciting.
Yeah, definitely. Founders that are building in manufacturing or energy often struggle with long sales cycles and complex buyers. So what advice do you give them to navigate these realities while still maintaining the pace needed to grow and attract investment? Are there go-to-market models that work, especially in these tougher, slower sectors?
I think some of that needs to be solved. However, necessity is the mother of invention. We cannot continue to erode any buffer we have. We cannot have the grid going down. We need to be able to build these factories. We need to be able to electrify transportation. We need to be able to build these data centers. And so we need to have massive advances. One of the big things, and this is really because of the national security aspect, something we think future administrations at both the federal and the state and the city level will have to address, is streamlining regulation. So I will tell you this. I have much more optimism that this kind of problem can be solved in the US versus solved in, say, Europe. Europe has the same problems, but there is a cultural willingness within the US for incumbents to work with startups, to take the risk, to gain the advantage from working with people who are singly focused on solving a particular problem. We don't find to the same extent in Europe. Europe is much more consensus and less risk tolerant. And I think there's sort of a risk profile within the US, a willingness to really support the new entrant will play to the US's advantage. I also believe that because of various technology advances over the last 10 to 20 years that are coming up to maturity, that there will be a Cambrian explosion of startups trying to address small niche elements in both manufacturing and in energy as well.
Definitely. To kind of wrap things up here, you've seen a lot of waves come and go, like you've mentioned. What is one principle that you always come back to when evaluating whether a startup that's in any sector is truly venture backable?
So, at FFVC, we've been fortunate that over 10% of the companies we back at what people call pre-seed level, the companies just getting going, get to 100 million revenue run rate. So we've been able to find successful businesses at an above average rate. It's a very simple test we look for. Do we believe this is a business that provides a solution that is 10 times better or 1/10 the price of the alternative? And if it can do that, then it can overcome the lack of the inertia that businesses have for staying with existing solutions. It needs to be materially better. Yeah. So we tend to invest, it's important that we look at something we think it can actually be a business. And we think it's important that it can be really differentiated. Now we'll invest very early. So, we invest in a company called Mana that is live and in production with last mile drone delivery in Finland and Ireland. They've done over 20,000 deliveries, contribution margin positive. We really like the idea of last mile drone delivery because the price of delivery at scale can be $1 versus $10 for putting someone in a vehicle to send you your burrito. And the delivery time can be sub 3 minutes as opposed to the average of 28 minutes. And so you end up with a much better product for the consumer. And it fits actually both metrics of being 10 times better and 1/10 the price.
Yeah.
So we think it's inevitable. There's regulatory barriers, consumer adoption barriers, business. There's whole things you have to get over to make this actually work. But it needs to be that much better. Now, if drone delivery took 20 minutes rather than 28, and if it costs the same kind of price or was a little cheaper, no one would adopt it. It's too much change, But the fact that it is so much cheaper and so much better is what leads, we think, to fast and capable adoption.
Yeah, absolutely. Well, unfortunately, that wraps up today's conversation with John Frankel, a seasoned investor with a sharp eye on what's next in tech, AI, energy, and beyond. So a huge thank you to you, John, for sharing such grounded, forward-thinking insights on how founders can navigate the evolving AI tech stack, where AI point solutions are driving real business efficiency, how to spot an opportunity in complex sectors like energy and manufacturing, and what ultimately makes a startup venture backable in today's climate. So if you enjoyed this episode, make sure to check out more of John's work at FF Venture Capital, where he and the team are backing bold founders building at the edge of what's possible. And as always, don't forget to subscribe to the Funding Blueprint wherever you get your podcasts. If this episode sparked new thinking or gave you an idea to run with, share it with a founder friend or your team. We've got more tactical, no-fluff episodes coming your way soon, so thank you so much for listening, and we'll see you next time.
Thank you very much for having me on the show.